Hello traders, and welcome back to Explain the Charts. Today is November 19th, 2025, and we're taking a close look at GBPUSD, or cable, which is currently at a fascinating inflection point. First, let's cover the news and the fundamental backdrop, as it's crucial for understanding the current market sentiment. Recent reports indicate the pound remains soft, with the market largely shrugging off the latest UK CPI data. More significantly, there's a lot of chatter about the UK government's recent fiscal reversal and a related bond market shock, which has introduced significant uncertainty. News outlets from just a couple of days ago highlighted that the pound was stalling around the 1.3165 level, a theme we will see reflected clearly in the charts. The major event that everyone is waiting for is the UK budget announcement, scheduled for next week, which is keeping many traders on the sidelines and contributing to the current consolidation. Now, let's jump into the daily chart to see how these fundamentals are shaping the technical picture. Looking at the daily chart for GBPUSD, we can see a very clear story over the past year. From the lows near 1.21 back in January, the pair went on an impressive bull run, peaking just above 1.37 in late June. That 1.37 area now stands as a major long-term resistance level should we ever see a significant trend reversal. However, since that peak, the trend has decisively shifted bearish. We have been in a consistent downtrend for the past 5 months, characterized by a series of lower highs and lower lows. This downtrend aligns with the fundamental story of fiscal turmoil and economic uncertainty in the UK that we just discussed. In late September, the price bounced off support around the 1.333 level, but that level failed in October. Now, that old support area around 1.33 to 1.34 is likely to act as a significant resistance zone on any potential rallies. Let's zoom in a bit on the more recent action on this daily chart. The selling pressure really intensified in early November, with a sharp drop on November 4th that took us from above 1.31 down to a low of 1.3009. This was followed by another sharp sell-off on November 6th, taking the price to a recent low of 1.30206. This 1.302 area has now established itself as a critical short-term support level. Since that low, we've seen a rebound, but notice how the price action has struggled over the last few sessions. On November 14th, we saw a strong push-up to a high of 1.32, but it failed to hold. The subsequent candles, including yesterday's close at 1.31466, show indecision and a struggle to gain upward momentum. This confirms the news reports of the pair stalling and tells us there's a major battle happening between buyers and sellers right here. To get a better look at this recent battle, let's switch to the hourly chart. Here on the 1-hour chart, we're focusing on the price action since the beginning of November. You can clearly see the aggressive sell-off I mentioned, which established that key support down at 1.302. Following that low, the price mounted a recovery, forming a clear upward channel. However, look at what happened when the price approached the 1.318 to 1.320 zone. This area acted as a ceiling, rejecting the price multiple times between November 11th and 14th. This price level is a classic example of previous support from late October now turning into new resistance. The break below this upward channel on November 12th was a bearish signal, suggesting the corrective bounce was over. Since then, the price has been consolidating in a tight range, mostly trading between 1.31 and 1.317. This sideways movement is a textbook sign of market indecision ahead of a major news event like the upcoming budget. Now let's drill down even further to the 15-minute chart to see the intraday action from the last couple of days. Here, the consolidation is even more apparent. We can see the price oscillating tightly around the 1.3150 mark. This level is acting as a short-term pivot point or a magnet for price. The wicks on these candles in both directions show that neither bulls nor bears have been able to take control in the short term. Volume is relatively stable, suggesting there isn't a strong conviction from either side just yet. For day traders, this presents a range-bound environment. A strategy here could involve looking for trades at the extremes of this short-term range, for example, selling near 1.317 and buying near 1.313, but with tight stop losses. A breakout with a significant increase in volume from this tight range will be the first clue that a bigger move is starting. So, what's the overall takeaway? Let's consider the bullish and bearish cases based on all this information. A bullish case would require a sustained break above the immediate resistance zone of 1.318 to 1.320. If buyers can push the price decisively through that level, it would signal a potential short-term trend reversal. The first target for bulls would be the 1.333 area, which was the support level from late September. A surprisingly positive UK budget next week could be the catalyst needed for such a move. On the other hand, the bearish case is supported by the dominant downtrend on the daily chart. If the resistance at 1.32 continues to hold, sellers will likely regain control. A break below the recent consolidation range, particularly below 1.31, would be the first warning sign. The ultimate target for bears would be a retest of the critical support at 1.302. If that support level breaks, there is very little support until the 1.29 area from back in August. A negative or uncertain UK budget would strongly reinforce this bearish outlook. To recap, let's outline the key price levels and our unbiased predictions. The major resistance to watch is the 1.318 to 1.320 zone. The critical support level is at 1.302. In the very short term, 1.315 is acting as a pivot. Our primary prediction, with about a 65% probability, is that GBPUSD will continue to chop sideways within this broader 1.302 to 1.318 range for the remainder of this week. Traders are likely to wait for the clarity that next week's UK budget will provide before committing to a directional move. A bullish breakout above 1.32 before the budget seems less likely, perhaps a 20% chance, as it would require a strong, unexpected catalyst to overcome the current uncertainty. Similarly, a bearish breakdown below 1.302 also seems less probable before the event, with about a 15% chance, as traders may not want to be caught short ahead of potentially positive news. The key thing to watch for is the budget announcement next week. That will almost certainly be the trigger for the next significant leg up or down. Before we close, please remember this is for educational purposes only. This is not financial advice, and you should always conduct your own research and risk analysis before making any investment decisions. Thanks for watching Explain the Charts. Don't forget to like and subscribe, and we'll see you in the next video.